Okay, good afternoon and welcome to Market Mondays. Thank you for joining us for today's session. It's Monday, the 23rd of October, 2023. My name is Alex Furber and I will be standing in for Tillen, our head of research, who is away this week. He will be back next Monday, but in the meanwhile, the show must go on and there's plenty to talk about in the markets right now. So without further ado, let's get into the show. Stick with us over the course of the next 20 minutes and we will give you three of our top picks, including why it's a good time to look at Singapore REITs with Keppel REIT. Gojek, are they about to establish a partnership with TikTok? And Genting. Genting's dropped 13% since mid-August, but here's why it could be a great opportunity. First, we will have a quick recap of last week's action to set the stage. Equity markets were mostly lower last week, and the three major US benchmarks all posted weekly declines. The S&P ending the week at 42.24. So this dragged markets closer to home lower. Singapore shares slid, ending the week in the red. US government bond prices continue to slide. 10-year yields briefly hit 5%. That's the highest since 2007. Remember that prices and yields move in the opposite direction. And earnings season stateside is now well underway, and we've got off to a fairly subdued start, which isn't doing much for sentiment either. Meanwhile, Jay Powell, the US Federal Reserve Chair, was seen reiterating the view that the Fed will keep rates higher for longer and that the inflation threat still hasn't gone away. And that was compounded by strong US retail sales figures last week. September figures came in hotter than expected, and August was revised higher. Add into that, we've got geopolitical tensions in the Middle East continue to rise. And this was particularly evident in the gold price, which ended the week in touching distance of 2,000, which is the highest since May earlier this year. So looking ahead, we should be braced for more volatility. Oil and the yield curve will probably remain major themes, and a focus on high yield and low PV with S-REITs could be a key thematic play. So with that in mind, we're going to go to Krishna Guha, and he's going to talk about Keppel REIT. Krishna, hi.
Hi, thank you, Alex. Thank you for having me. Indeed, it's time to brace for more volatility. And I think we are maintaining our buy rating on Keppel REIT despite the negative outlook for the overall sector. Three key reasons for this. If you look at Keppel REIT's overall portfolio, it constitutes mostly high-grade CBD offices in Singapore, Australia, and a couple of buildings in Korea and Japan. And if you look at the supply situation in Singapore, we don't have much supply up until 2024, 2025. And then even going forward, the supply is really limited. So we think that the balance of demand and supply should support Keppel REIT, even if the hybrid work environment continues well into the medium term. The second key aspect of it is the valuation. Right now, Keppel REIT is yielding about 7%, and you have on a price to book basis, they are at a 30% discount. So we think quite a bit of negativity is already priced in. Sorry, and even if these assets are supposed to be revalued lower, the current price is already factoring in that. And finally, coming to the distribution itself, Keppel has said that they will be distributing their divestment gains over the next 5 years. So this will also result in the stable DPU profile. So because of these three factors, we are maintaining our buy rating on Keppel REIT despite the volatile situation for the overall sector itself.
Okay, thanks. And the property sector, I guess, has had a really tough time in this interest rate environment. What makes now the right time?
So I think you can start doing some bottom fishing, but what I will say is that you need to take a bit more of a longer term outlook of it and prepare to have some drawdowns. So it is about patience and picking the right sectors. So right now we are recommending that you stick with the liquid large caps, which can let you get in, get out of the sector, depending upon how the yield curve and the broader macro plays out. So our top two picks in that sector will be Capital and Integrated Commercial Trust, CICTSP, and Maple Tree Logistics Trust, MLTSP. CICT is almost centered around Singapore. Over 90% of the revenue is derived from Singapore commercial assets. spanning across suburban retail, city center retail, as well as offices. And for Maple Tree Logistics, it has a well-diversified presence in the region, and it has a good network of the regional warehouses. So the structural demand for warehouses will definitely benefit MLT in the medium term.
Okay. And what are the major downside risks? Let's say interest rates aside, are there any other major downside risks investors should be considering at the moment?
So I think the key obviously is the asset valuation, which has not corrected as yet. So we need to see how these things are marked to market. The second thing will be on their operating expenses. We have already seen that inflation has come up from the very low levels of the last decade. True, these things have started to moderate, but we are still seeing operating expenses running high for these REITs. So I think those are the two key issues that will continue to be in the limelight. And obviously, the third one goes without mentioning about the funding cost itself.
Yeah. Okay. Fantastic. Thank you, Krishna. Thank you. Okay, great. So Krishna is reiterating his buy call on Keppel REIT. And next we will go to Etta Putra, who's dialed in all the way from Indonesia to talk about Gojek. Etta, hi.
Hi, good morning, everyone.
Good morning. So look, headwinds facing, if you could just cover off some of the headwinds facing TikTok to begin with, and then we can perhaps delve into where Gojek fit into that picture.
Okay, so basically the Indonesian government released new e-commerce regulation on the late September, which is a more stricter regulation. This allow the e-commerce platform to directly import from China. So the current imported product must follow certain regulation, including the national certification as well as the halal certification. So on the social commerce platform, the government expand the integration of social media as well and e-commerce in the same platform. This resulting in the TikTok to be unable to sell directly on the social media platform. So to return to the market, TikTok need to get the e-commerce licenses.
Okay. And so why do you think that Gojek would make a good partner, and how can Gojek solve these problems in Indonesia for TikTok?
So we think at the moment there are three ways for TikTok to come back to the Indonesian market. One is through the establishing their own e-commerce licenses as well as the e-commerce platform under new subsidiaries, which we believe will take time. The second is that they can acquiring the existing e-commerce company, a small one, or on the third stage, they can collaborate with the existing e-commerce platform in Indonesia. So we think that if the media reporting that speculating that they can come back on the 10th November, which is the National Hero Day in Indonesia, in the short amount of time, we think that the most possible way is through the partnership with the existing e-commerce platform. So we dig down three basic requirements for to be selected as the partner. One is that they have an integrated ecosystem, especially for logistic and digital payments, which is TikTok lacks this area in Indonesia. The second is that the partner must have a massive user base. And the most important thing is that they have the deep understanding on the local market, especially on the regulatory side. Based on this analysis, we compare all the three domestic players in Indonesia, which is GoTo, BUY, as well as Bukalapak. Based on this ecosystem, we think that the most complete one is the GoTo. So we think that if TikTok needs a local partner in Indonesia, I think GoTo is one of the most prominent candidates for them to get easily re-enter the market in the short amount of time.
Okay, makes sense, and it could be very exciting. What are the major downside risks for Gojek from here? What should we be looking out for?
So Gojek or GoTo will release the financial result by the end of this month. And going forward, we think that key factor remains on the competition landscape, especially on the e-commerce, where they need to compete with the Shopee Indonesia, and they are aggressively expanding through the marketing on the third queue. So related to the second risk that we need to address is that the rising competition from TikTok, if they're not choosing Gojek as the partner, then the competition will continue to increase going forward.
Okay, excellent. Thank you very much, Etta. Appreciate that a lot. Thank you. Okay, so the third stock that we have for you here is Genting. So we're going to take a quick look at Genting. If we could have the slides up for that. You can see that our analysts here are reiterating their buy call on Genting. And we have a target price there at $1.12. So since the news of the now 2.8 billion money laundering case broke in mid-August, Genting's share price has fallen by about 13%. Now, this was mainly based on fears that the VIPs will lay low to avoid casinos. But our analyst's conversation with the company revealed that that's just not the case. It is business as usual for the VIP market, and the mass market continues to grow. So with that in mind, our buy call remains, and our target price sits at $1.12. In our view, that the market is effectively discounting Genting's net cash pile entirely, which we believe is overly negative. Genting has stated that it didn't notice any discernible decline in engagement with VIPs, which is obviously great for the company. And despite no meaningful Chinese visitation, Resorts World mass market gross gaming revenue for the first half of 2023 matched the first half 2019 and is trending higher on new migrants to Singapore. That is all whilst mass tables revenue, gaming revenue is seen a lot more meaningful Chinese play relative to the first half of this year as well. So, you know, with those things in mind, our analyst also notes that the flight seat capacity has reached 8% of 2019 levels. So it means more tourism is coming back to Singapore. And I don't know if anybody spotted it last week, but rival MBS is performing very well. New York listed Las Vegas Sands released results last week that showed MBS's adjusted EBITDA was up 14% Q on Q. So very much maintaining buy on Genting. We estimate that VIP volume will stabilize and that mass market gaming revenue will continue to grow as more Chinese tourists return to Singapore. And we reiterate the target price there at $1.12. So now a quick look at a few trade ideas from our chartist, Nick. If we could have a look at the charts on the screen. The first one we have for you is Dynamac. So Dynamac, we've seen a short-term correction since August 2023, but this could be about to end. The stock is approaching a confluence of major support zones around that 32 cents region. And given that the stochastic reading has hovered inside oversold territory on the back of weaker price action, we think there's a pretty decent chance of a reversal ahead. And we could be looking at kickstarting a new upcycle afterwards. So potential opportunities with Dynamac. The other one we have for you is Maple Tree Industrial Trust. That's on the screen now. So if you have a look at the chart action there, you can see that since September 2022, the stock has continued to trade lower, and it's below that critical 200-day EMA line, despite making numerous attempts to break that resistance over the past 12 months. And last Friday, we had a break lower on the back of higher trading volume, and we think that's effectively kickstarted a new down cycle, backed by an equally bearish technical reading in the stochastics. So this stock could trade lower and may look to test for support around that $2 in the not too distant future. Okay. So zooming out, we'll just finish with our macro view. GDP growth saw a gradual pickup to 0.7% in the third quarter, and that was from 0.5% in Q2. The manufacturing slump eased while services grew at a slower but resilient pace. So there have been green shoots of recovery in Singapore's exports and manufacturing too. The PMI turned expansionary in September. Non-oil domestic exports fell by the least since April, albeit that is still a 13% year-on-year decline. But we will be keeping our 0.8% GDP growth estimate for 2023 and we expect a recovery to 2.2% in 2024. Growth underpinned by trade recovery. We should expect easing domestic interest rates and reopening tailwinds in tourism and construction. So that's the macro view. It's worth noting that risks remain given uneven global growth. We've still got elevated US interest rates, which could be problematic, and the escalating Middle East conflict is obviously a massive unknown at the moment. So there's plenty to look out for at the moment. Coming up this week, US earnings will remain in focus. We've got tech and some other big names are reporting. Microsoft and Alphabet will go on Tuesday. Meta on Wednesday. Amazon are reporting on Thursday. So that's among some of the highlights. Coming up this afternoon at 1 o'clock, we've also got Singapore inflation data. And on Friday, the US will publish the PCE index, which is the Fed's preferred measure of inflation. So do take note of those events coming up this week, and keep an eye on your calendars and get hold of an earnings calendar on the US side as well. Finally, we'll take a quick look at some forthcoming events on our side. If we can just get that slide up. Excellent, there we go. So the 25th of October, we've got some updates on Asia, China tech names. Sector updates by Haitong International. It is invitation only, but do contact your trading representative if you're interested. And don't forget our podcast, ASEAN Speaks, which we release every Monday. It's available on the likes of Apple Podcasts and Spotify, depending on wherever you get your podcasts. It's a must listen for anybody trading in the region. So that's all we have time for today. I think that wraps it up. Thank you for joining me, and have a profitable week. And Till, like I say, we'll be back next week. Thank you, everybody. Goodbye.